You're plugged into Schaumburg Speaks, a podcast highlighting and celebrating local businesses and community in the Schaumburg area.
Hello and welcome to Schaumburg Speaks, where we're plugging into business and community, brought to you by the Schaumburg Business Association and Ian Ryan Interactive. I'm your host, Andrea Bewer, the president of the SBA, and today's episode is packed with powerful insight you won't want to miss. I'm absolutely thrilled to welcome longtime SBA chamber member, trusted mortgage expert, credit guru, and dedicated Schaumburg resident, Bruce Beddard. And Bruce is the senior loan officer with NEXA Mortgage. Bruce, welcome to Schaumburg Speaks.
Thank you very much for having me.
How are you doing this morning?
I'm doing good.
Yeah, great day in the Chicagoland, Schaumburg area.
Hey, it's springtime.
Yeah, it is springtime, and I'm just excited to have you because this topic is so important. So let's just get right into it. I'm sure our listeners are wondering, and for some of our SBA members that have known you for a long time, how did you get into this industry that ultimately gave you the title of like the credit expert in town?
Well, first of all, I got into the business 26 years ago after running factories for Motorola.
You were
for
just
19.
born 26 years ago.
Yeah, right. I'm old. I accept that. Nobody ever really forgets that I'm old. But I used to run factories for Motorola, so I took everything as a business transaction. And so when I got into the mortgage business, a friend who was doing all my loans for me as I was buying investment properties said, you'd be great at this business if you ever have to. And when Motorola shut down my division, sold it and said, get out, then I took the hint and I left Motorola.
You got out, yeah.
And so I started doing that, and everything I do in my business was what I did at Motorola. And that is that I want to understand what we're doing, why we're doing it, and how we're doing it. And that makes me more successful with my customers because I like explaining what we do. Credit is exactly the same extension, credit scores. You need to understand what's going on. And unfortunately, the credit industry is pretty, they're pretty tight to the chest of what they want people to know. Even the mortgage business is that way. And so this gives us a chance for me to teach them. And I believe that the vast majority of people, if you teach them what the rules are, they'll abide by them, and then their credit scores will be better. That's my logic.
Well, that's great. Well, we're so excited to have you to give advice, to our listeners. So let's just dive right in. With today's real estate market, it's constantly shifting and the economy is sending mixed signals. How is the mortgage industry evolving? Because I know there's been a lot of changes the last couple of years.
Yeah, I get that question a lot in terms of what's going on in the last couple of years. There's not a ton that's changed in the last couple of years, but it has changed dramatically since the collapse occurred in 2010. But the main difference that's going on right now is the percentage of loans that are being closed by mortgage brokers. Not that everybody really understands the difference, but there's really three types of people that originate loans. There's a bank, Chase, Citibank, et cetera. There's correspondent lenders. And what that means is they underwrite and then sell their loan afterwards. And then there's mortgage brokers. And in 2014, the percentage of brokers that closed loans were 14% of all loans originated. And last year it was 27%.
Yeah.
And they're projecting it to be 40% by 2030.
You could explore everything. And is that the major difference? You could look at different options for everyone versus...
Yeah, the main difference is when you go to a correspondent lender, when you go to a bank, you get one set of products and it's their rules. And if you match their rules, great. If you don't match their rules, they reject your loan. You go to a correspondent lender, like my last place that I was at, had 40 different lenders. So they had 40 options as opposed to a bank that had one option.
That's a lot of options,
It
though.
is,
Yeah.
but the rule for them was if it didn't match Fannie Mae, Freddie Mac, FHA, or VA guidelines, they would not deviate from them because they didn't want to be stuck with the loan.
Sure.
And so if they could get 3 different banks to agree to do this thing that they want to deviate from Fannie Mae or Freddie Mac, then they were okay with changing that guideline. In the broker world, nobody cares. It's one bank. If the Bank of Andrea wants to do something that's outside of Fannie Mae, Freddie Mac guidelines,
You can.
as long as Bank of Andrea wants to do it, then We just send it to Bank of Andrea, you underwrite the file, and it's good to go. And with 270 banks to choose from, I don't have an opportunity where somebody has a product that I don't have.
So you could offer anything to everyone.
And what happens in the broker world is it moves faster. So when we go to the broker world and say, we need a loan program like this, we've seen this in our market, what can you do? We go to our top lenders and then they'll do the research. Sometimes as little as a month later, they've got a product that matches what the market's doing. Okay. So it gives us a much better opportunity to give everybody what they're looking for.
And hopefully you could find best rates for everything.
Yeah.
So we know things are changing a bit. What changes, in your opinion, should happen to the mortgage industry as it stands today?
Yeah, there's two big ones, and they bug us in the industry, and the consumers don't really know a ton about them, but they're both horrible. And one is the cost of credit reports. So you cannot get a loan in this country, whether it's a credit card, a car loan, student loan, mortgage. You can't get it without a bank pulling the credit report. A few years ago, before COVID, it was $15 to pull a credit report. It's now $75.
And do you have to, let's say you're going with 4 different banks or 4 different lenders, do you have to pull a credit report for each different one?
No, we just pull one credit
you
report.
You pull one and then you could use it. Okay.
Yep. But still, the consumers don't have a choice. Right. And it's terrible that they're doing this just to make money. And then to add insult to injury, they make even more money doing something else that I believe should be illegal. And that is this. We know that there's 3 repositories out there: TransUnion, Equifax, Experian. Okay. And the problem is each one of those sell what's called, something you've probably never heard of, called trigger leads. Have you ever heard of that term?
I have not.
Okay. So if I said, Andrea wants to get a mortgage with me and I pull your credit, TransUnion, Equifax, and Experian sells your information to other mortgage people.
And then you get, that's interesting, because I did that last year and I did get a lot of, I'm still getting text messages on my phone.
Yeah, 2 things. So we had somebody in the company that within an hour had 39 phone calls and texts.
Oh, yeah, that's awful.
39. Here's where it should be illegal. In the mortgage world, there's actually a law that prevents me from, the terminology actually says, from disclosing any non-public data from my customer. So Andrea. And so, but the credit bureau has more information than I have. They know everything about you. They know your cell phone. They know your home phone, if you have one. Most people don't anymore. They know your email address. And then they go sell that to everybody else that wants to buy it. I assume everybody's not doing something nefarious, so they're legitimate businesses.
But you never know, because that's a lot of proprietary information.
But the problem is with trigger leads, some of them are unscrupulous because they will imply they're working with your loan originator, and so they just need to review some of your data. And then it'll get you to, oh, Andrea, can you just go ahead and make sure you spell your name for me? Yeah, I need to verify your date of birth. I need to verify your social security number. And what they're doing is they're recreating a loan and say, I can offer a better deal than that guy who pulled your credit.
Let me ask you a question. Obviously, the loans the laws are the way that they are. Is there anything that a consumer like myself, who is working with a lovely mortgage broker like you, do to stop that? Yeah,
there's what's called it's like do not call for your credit. You can go in there and tell them, stop selling my data. So there's a form. I just give it to everybody that wants it. I explain what's going to happen, and I give them that form. It'll take about 10 business days, sometimes 12. And then once you do that, they won't sell your data
Can
anymore.
You do that before you run the credit? Okay, so you could. So for your customers, you could get them all stop selling. And
if nobody wants to get that, they should do that now. And I'd be happy to provide that to anybody that wants it. But the other side of it is all of our legislatures. And this is a sad commentary, but it's part of politics that we have today. And that is special interest groups, lobbyists, are petitioning them to not, there's been a bill in front of Congress 5 different times saying that you need to stop them from selling this data. You can sell all public data because anybody can get access to it anyway. Andrea's home address, they can get it. It's part of the county records.
Get it on the internet,
But they don't have your cell phone. The people who have your cell phone are your creditors, and they don't know that you're applying for a mortgage. Only the credit bureau does. That's not public data. But every single time it comes up, they debate it. They talk about it's not nice and this is wrong, and then they end up not voting on it. And there's only one reason. because they're trying to protect consumers with identity theft and fraud that goes on. They're not protecting the consumer, and they're doing it probably because the lobbyists for the credit bureaus they're making a lot of money off of it.
Well, that's interesting. Okay, so switching gears, when people hear this, hear this episode, and it could be midsummer of 2025, what do you think rates will look like? Like, where do you think we're going? And I know you don't have a crystal ball, but you've worked in the industry for over 25 years. What have you seen? Or are we in unprecedented times? I mean, what do you think?
Well, there's a bunch of things, but personally, I believe we're in the mid sixes right now, 6 3/4 or so.
Which is not bad if you go back 20 years ago.
Those of us who've been around the block a couple times.
That's what I did on my first house.
Yeah. Oh, unfortunately, my house in 1984, my wife and I debate whether we had 11 and a half or 14 and a half.
Now that's bad.
It was ugly.
Yeah.
Just put it that way. It was really ugly. And we thought we were going to be rich when we refinanced it under 10%. So, by the way, 14 and a quarter, and I had to pay 2 points to do that.
Until you went down to 2.5 a couple of years ago. Wow.
So I personally believe we're going to be in the mid sixes, but there's massive variables that are making that almost impossible to predict, because what's the economy going to do? We have certainly slowed down some. Mm-hmm. There's no doubt about that. And then the other one that nobody likes to talk about is if and when this tariff discussion will be resolved. Whether it's being brought into place to negotiate better deals, or whether it's a way to generate revenue and it's going to be here forever, I don't know. I hope it's just a negotiation tactic and tariffs will go away. But if it doesn't, we run the risk that we'll get higher inflation. And the higher the inflation goes, the more likely we're going to have higher rates.
So with that said, some folks are predicting a collapse in 2025. Is that something that you think may happen? Or?
No. Yeah. And so what I tell people is, and it's not intuitive, but I always just say, if you see somebody on social media talking about this going to collapse,
turn the station.
I just say, look at the agenda that they're on.
Okay.
I was just having a friendly discussion, no arguments, with a guy that was insisting that the market's going to collapse, and he is a short sales specialist. Okay. So he's trying to push his narrative. Maybe there's political narrative, but I don't think it's a political discussion. It's just that there's nothing in the data to suggest that we're going to have a collapse. So what are those things? One, we don't make those heavily risky loans. Somebody with a 580 credit score, letting them borrow 100% of the home's equity. We don't allow that anymore. So those things have gone away. But the biggest one is this. Here's a statistic. Back in 2010, when the industry collapsed, the average equity in a home was $75,000. Take a guess. What do you think it is today?
150,000.
313,000. So in order I go from a business perspective. From a business perspective, in order for you to believe that a bunch of people are all of a sudden going to get foreclosed upon, you have to believe that the home prices are going to drop more than 300,000 or 50%.
Probably not.
They're not. Or you have to believe that people are just completely stupid and that they wouldn't sell their home before they got behind and they were going to lose the home and lose $300,000 in equity. Right. I don't believe either of those things to be true. Right. So I honestly believe that that's the case. And there's this other narrative that foreclosures have started to go up. Okay, that is true.
Some people are losing jobs. I mean, we are hearing about that.
Well, here's where it's true though. So it's always true. And then the answer is, but if you look at the data, the chart says you can see that foreclosures were going down, 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 down. Then they went to almost zero during 3 years of COVID. And now they're starting to come back because banks are starting to foreclose on those people who weren't making payments for 3 consecutive years. It's still at the level of pre-COVID. So we are not anywhere near the level that we were back in 2008, 2010, when 14% of the homes were being foreclosed upon. So nothing close to that.
But we are seeing, I'm going off topic a little bit, a lot more people renting now, and rents going really high.
Rents are ridiculous.
Do you see that trend continuing?
I don't know the answer, but I listened to somebody say, this was just his opinion, but I didn't see what his logic was. He said, I'm anticipating rent to stabilize in 2026 and 2027. But here's the caveat. By stabilize, he means it's not going down. And then in 2028, between 2028 and 2029, he's expecting a 40% increase in rent. I don't know if that's true or not. I don't think rents are going to go down. I'm a landlord. I'm happy for all the people that rent from me and pay the mortgage so that, I can be on my path.
Right.
But the reality is there will always be a segment of the population that rents.
However, sometimes that segment of population could only afford so much. So I just wonder if that will continue. Not who knows?
No, the answer, it will continue in the sense that, for instance, we both know of places here locally that have 600 square foot apartments that are renting for $2,300.
Right.
I can find places for someone that's going to cost them less than $2,300 and they can have home ownership if they choose to.
Got it.
So it's really up to them. Some people just want to rent because they want that flexibility of being able to move. Others do it until they can get to a point where they can buy.
So from your perspective, what are the biggest risks facing real estate and mortgages today? So
I believe high interest rates are certainly one. There's no doubt that I would love interest rates to be back down under 3%. I don't honestly believe they'll go back below 5% anytime soon. But let's suppose they go back down to 5%. Even the people who had 2.5 or 2.75 might consider moving if they're only going from 2 3/4 to 5%.
Right.
They're just not going to do that very often when it's 2 3/4 to 7.
No.
So that's an important distinction. Inflation, we need to make sure that inflation is stable, and it is on a downward trend. There's no doubt about that. We'd probably be close to 2% by September, October. So inflation is coming down. There's no doubt about that. Tariff resolution, I still believe that's an issue that could impact us. And then the last one that I think won't get solved, at least not in the next 2 or 3 years, and that's new home construction on the lower end. I don't mean on the first-time home buyer end. So smaller homes, smaller purchase prices. But builders have just had a narrative lately that I don't want to build a home unless I can make X profit. And so therefore they're building homes that are $500,000 and $600,000, and that's their sweet spot right now. They're just not building those starter homes anymore.
Yeah. So now let's get to actionable. Can you share with us 5 tips that someone could do right now, and I'm listening to this, to boost their credit score before applying for a mortgage?
Okay. So first caveat that I want to say is it's very specific to a person's situation. So when I do an analysis of a person's credit report, I don't analyze other people's, I'm analyzing yours. So we need to look at your specific report to see what you're specifically doing that is hurting or can improve your credit score. But the number one thing I tell people to do all the time is look at your credit report. Most people never do.
And they can, like most banks, you could just click a button and
go online.
There you go.
You can go online and get it once a year from each one of the repositories, TransUnion, Equifax, and Experian, for free.
I think Chase even offers it for free. Or they used to. I don't know if it's still anymore.
Let's assume they offer for free.
Yeah.
Here's a little fact, deviating from the 5 tips. Here's a little fact that most consumers don't know. There's not one credit score. So keep that in mind. There are models. And there's different models for different industries. So there's a model for the car industry.
Okay.
There's a model for student loans. There's a model for collection companies. And there's a model for credit card industry. And there's a model for the mortgage industry. And the mortgage industry is going to be the most stringent because we lend the largest sums of money over the longest periods of time.
Although cars are pretty much getting up there lately.
Yeah, but 5 or 6 or 7 years is a whole lot different than 30.
Yeah, a whole lot different, for sure.
But so that's the caveat. You need to make sure that you understand that if you get a credit score from Chase, it is the credit card model. It is not the mortgage model. If you've got an 800 credit score, the odds are your Chase model and the mortgage model are going to be very, very close. Second, never, ever trust Credit Karma. Credit Karma is garbage, in my opinion.
That's good advice.
And it has 2 values to me, and that's it. One, it's free. If they even wanted to charge you $1 a year, don't pay it. And second, the value is they notify you if anybody has looked at your credit. So I like those 2 things about it. But their accuracy of their credit reporting is not good. Okay. So back to tip number 2.
Okay.
And this one's going to be a little long-winded because when I teach my class, I go through this example. So I'm going to use you.
Okay.
I'm going to say the first part, and it's going to sound obvious. Never, ever pay your bill late. Sounds obvious, right? Here's the thing I want to make sure that people hear. When I'm teaching my class, I say, Andrea, you make all kinds of payments, credit cards, mortgages, car loans.
Sometimes you forget.
No, let's pretend that you think you're paying your bill.
Okay.
So when is your payments due every month?
Let's say it's the 15th.
All your bills are due on the 15th?
No, but let's say.
Okay, all of them are. Here's the thing that you need to understand. When I teach my class, I say, your bills, would you be surprised if I said that your bills are due, all of your bills, not your bills, all of your bills are due on the exact same date every single month, exact same time, every single month?
I would be surprised.
And here's why you would be surprised, because you don't read that fine print that's in like 2 font. It specifically states this: your bill is due on or before the due date. So whatever that says, if it's the 18th this month and it's the 19th next month, your bill is due on the 18th or 19th. Why do I say that? Seems obvious. Here's why. When I sit in my class and I remind them, I look out in the classroom of 30 people and I watch their face and I say, if your bill's due, credit card's due on the 15th, has anybody that you've ever known, I don't want you to raise your hand, but has anybody you've ever known paid their bill on the 16th? And I'll say, yeah, okay. Well, why would your friend do that? Because there's a grace period. Okay, here's the truth. There is not a grace period. No grace period. There is one time when one loan legally has a grace period in it. Do you know what that is?
I don't.
Mortgage. A mortgage is required to have a 15-day grace period. So it's due on the 1st, and as long as they receive the payment on the 2nd through the 15th, they cannot mark you late on the credit report, and they cannot charge you a late fee. Every other bill that you pay, if it's on the due on the 15th and you pay on the 16th, they may or may not charge you a late fee. But there's a little known fact, and I'm going to guess you don't know this. There's a little known fact that is hidden, and I call it like the hidden cancer. So if you pay on the credit report, it'll tell us, did Andrea pay her bill on time? Or was she 30 days late, 60 days late, 90 days late, 120 days late, etc. But what if you paid 3 days late? It doesn't show up on your credit report, right? But actually it does. It's what's called a slow pay. And when the credit card companies report, they say, okay, Andrea's bill was due on the 15th. Did she pay as agreed? The answer is going to be no, because her bill was due on the 15th and she paid on the 16th. And then it's going to say, was she more than 30 days late? No. Was she more than 60 days late? No. More than 90? No. More than 120? No.
It's
going to go through that.
Yeah.
But at slow pay is
Still
like a silent cancer.
Okay.
And
Good
so
to know.
when I look at credit reports, I'd say, if I don't see anything on there, no collections, no late payments, no judgments, no foreclosures, no bankruptcies, and I see a 660 to 680 credit score, I know it's one of two things. That's the only way it is. It's either you've got a bunch of slow pays, and as soon as I explain slow pay, I start to see people's face go, okay.
Are you seeing my face?
No.
I know. I'm
When
like,
I'm sitting in class, nobody's ever heard the term slow pay.
Yeah.
Now, and then the second one, if somebody's got a mid 600s with nothing derogatory on their credit, is that what's called their credit card utilization. Lots of people, I think, have probably heard of that. Have you heard of that?
Oh, yeah.
Okay. So simply put, it is, what is your available credit limit? And when I teach my class, I say, when you go home, I want you to pull every single credit card statement you have. And most people do it online, so that makes it more challenging. Find out what your credit limit is. And then always, they're going to say at the end of at the period of time when I report to the credit bureau, let's say Chase, when Chase reports to the credit bureau, they're going to report this. Did Andrea pay on time? Yes. So if she paid on time, yes, they just move on. Say, they know what the balance is. They say, what is her balance at the time that they report? It's not when you paid your bill. Because I'll get people say all the time, okay, Bruce, but I always pay my bill off in full. I had a friend go through that. And I said, look, it's one of two things. I never pay slow pay, so that's not it. Then it's your credit card utilization. Within 6 months, his credit score went from 680 to 804. And it's because he thought that if he paid the bill in full, that he was fine. And unfortunately, that's not. Whatever day they choose to report to the credit bureau. So let's go back to Chase again. And say your bill's due on the 15th. Maybe Chase reports to the credit bureau on the 10th. And so if they report on the 10th, your limit's 5,000, you charged 5,000, but 5 days later you paid it all off, don't care. On that date, you were at 100% utilization.
Got it.
And so always, if I'm telling people to build credit, I want you to stay at 10% or less utilization, but under normal circumstances, 20%. So that's the things that people can do. And trust me when I tell you this, you can make as little as 90 days. You can make your credit score go up 50 to 100 points if you've been not abusing, that sounds terrible. If you've been violating that one rule.
And many people just don't realize
Correct.
that information. So that's
Correct.
great. So I'm going to switch gears.
Okay.
We talked about credit. We talked about all sorts of stuff. And I know you've been part of the Schaumburg Business Association for such a long time, and
20 years.
So I know, and you're so well trusted. How has it helped you grow your business through the chamber or through other organizations, volunteering, other things like this?
The Schaumburg, the SBA, I think, is different than other organizations in that partially one of the benefits is because it's so large. And there are so many people, and the vast majority of people, I mean, probably upwards of 98% or more, are really good people.
They really are.
They're good business people, but they're also really good people. Right. So if you get to know people, you know that they're good people that you can talk to and you can trust and you can bond with and help you with your business. Because I promise you, whatever challenges you have in your business today, someone else in SBA is experiencing it too. Mm-hmm. Or they have experienced it and found a way to get over it. And so if you can meet those people, you can help grow your business as well. Besides the obvious stuff of you need a painter, there's a painter in the group. Mm-hmm. You need a plumber, there's plumbers in the group. So all of the obvious stuff, there's morning events, there's evening events. I don't get to go to morning events too often because I'm following the bond market, but there's morning events. So if you're a morning person, go to morning events. There's plenty of morning events to choose from. There's plenty of evening events to choose from. Go to both. You'll meet more people. There's people like me. There's people that go to morning events. I don't know them that well because I don't go to morning events very often, maybe once a year. And so therefore, I don't ever get to meet those people. Yeah. But you can learn a lot by doing that. And the other one that I think is hidden, and I tell everybody that's new with SBA, that especially if they're new in the business world, is use this platform to develop your story. Mm-hmm. Because when you're meeting someone, when somebody meets Andrea, I have to tell you what I'm doing, right? So I get to polish what I do by talking to you and talking to everybody else that's in SBA. And at a normal evening event, there might be 50 to 75 people there. Right. I got 50 or 75 people opportunity to tell my story. Where else do you get that opportunity? It's unbelievable, the ability to tell your story to so many people every single month.
Well, and it's unbelievable for our members and unbelievable for the team here at SBA to get to meet members like yourself and trusted mortgage brokers that could give us credit advice like you did and give us your opinions on where the industry is going, because it's impossible to know everything about every different industry. So I know our listeners are listening to here, and you just are such a really great guy. If they're interested in learning about their credit scores and buying their first home or just refinancing, exploring, how could they get in touch with you?
My cell phone's always with me. My wife and daughter will
tell you.
And
it is. I know we get in touch with you morning, noon, and night. My
wife and daughter will tell you that. But my daughter's not little. You know my daughter, but she's not little, so she understands it now. But my cell phone number is 847-772-1780, or they can email me. Mm-hmm. It's my name, my first initial B, and then my last name, BEDDARD at NEXA, NEXA mortgage.com.
Or you could just go to www.schaumburgbusiness.com and look up NEXA Mortgage and Bruce's name, and you could find him there, or give our office a call and we'll get you to him. So Bruce, before we end, is there any last minute advice you could give somebody right now that's listening that is ready to apply for a mortgage? Other than call you.
That sounds self-fulfilling to say that, but the answer is be prepared. Find somebody you can trust. If it's not me, that's okay. Mm-hmm. I really am okay with that. But it needs to be somebody that you feel like you can trust. Part of my business is I explain what we do, why we do it, and how we do it.
And sometimes it may be uncomfortable too. And if it's somebody that you could trust, I could see that.
And you have to, if a mortgage person's just asking you questions and writing notes, I call them an app taker. I don't want you to work with an app taker. I want you to work with somebody who's going to explain the process so that when I say this to everybody. So if the answer is no for Andrea, it may not be no for someone else. Mm-hmm. You need to know why it's no for you or why it's yes for you, because you may say, my friend said I can't do that. And the answer is your friend may not have been able to do that because of X, Y, and Z, but you're able to do it because your situation's not the same as theirs. If somebody like myself doesn't explain that to you, how are you ever going to learn why it's yes or no for you, but something different for someone else? And that's the thing I think you need to do, is get somebody that you feel you can trust, whoever that is, and pick up the phone and call them and lean into what they're telling you to do. Because what I'm telling you is, I will tell somebody, don't do this. And then inevitably they will do that. And I'm like, you just created a firestorm that now we have to undo.
Yeah. Well, thank you so much, Bruce, for being with us today. And this was good. See, and Bruce, for those that don't know, is formerly on the radio. Yeah. And this was so much fun and very, very informative. So thank you for being here.
Thank you very much.
Have a great day.
Thank you.